Here are some difference between service business income statement and the sole trader's income statement. So here in the service business income statement, we write the revenue, then we add all the incomes. And from this total, we subtract all the expenses to calculate profit or loss for the year. But sole trader's income statement, we have two sections in the income statement. The first section is called trading account section. There we calculate gross profit or loss, okay? And with this gross profit or loss, we add all incomes. After that, we subtract all the expenses to calculate profit or loss for the year. So service business income statement, very common in the question. We see many students make mistake when you prepare this account in the exam. So here step by step I'll show you how to answer. For your better understanding, I have taken a question from IGCSE O-level accounting past paper. So before we write up here, let us have a look at the question. Fee Limited provides cleaning services to client office and factories. The client provide their own cleaning materials. The trial balance of B Limited at 30 June 2023 was as follows. So here we see a list of balances, okay? So this is the first part, and in the second part I'll show you how to prepare a statement of changes in equity as well. So here we have some item related to statement of changes in equity. Good. So here at the end of the question we have additional information, 7 adjustments, okay? This will be also taken to write this amount here, items here. Okay, good. So what is our first item here? Our first item is revenue, yeah? So let us write here revenue. So here on the question we have the first item, okay? Revenue, it is $135,040. Okay, so here our first adjustment is revenue of $9,240 received in advance, okay? So we received in advance, so this amount is not for this financial period ended 31st June 2023. So now advance amount we need to subtract, yeah? So let us write here less advance $9,240, okay? So now if we subtract we get $125,800, okay? Now from this amount, from this total net revenue, we will subtract all the expenses, okay? So here our first expense is wages and salaries, okay? It is here $72,000. And next we have here motor expenses, $9,820, okay? So let us write these two expenses. So before that we will write here less expenses. Okay, so here the first one is wages and salaries, and then we have here motor expenses. So salary and wages we see on the question, it is $72,000, and motor expenses we have on the question $9,820, okay? Good. What is our next expense here? We see here insurance $11,040, okay? So we have an adjustment related to insurance. Let us have a look at that. So number 2 here we see the insurance charge for 12 months to 31st December 2022 was $7,200, okay? For the 12 months to 31st December 2023, it is $7,440. On 1st January 2022, insurance was paid in full for the 12 months to 31st December 2023. So here insurance we will write first. So we see here two amounts. First of all, what is our financial year ending? It is 30 June 2023. Okay. So here first amount insurance $7,200. This one paid until 31st December 2022. Okay. And the another amount $7,440. This amount is paid until 30 December 2023. Okay, 30 December. So let us write here. This amount we received for 12 months. Okay, and here this amount also we received for 12 months. Okay, this is mentioned on the question. Okay, so from which date to which date we received this money? So $7,200 we received from 1st January to 31st December 2022. Okay, and this amount 7,440 we received 1st January to 31st December 2023. Okay, so now what to do? How to calculate for the financial year ended 30 June 2023. So first of all, you need to understand the financial year. So here for this business B limited, financial year started on 1st July 2022 and ended on 30 June 2023. Yeah. So here for this amount we paid until 31st December 2023. Okay, so here we have 6 months advance. Okay, and at the same time we received this amount until 31st December 2022. Okay, from 1st January 2022. Okay, so here also we received 6 months in advance. Okay, so now what to do? Now we will add these two amounts. Okay, so here if we sum up $14,640. Okay, now we will divide this amount by 2. So if we divide, we get $7,320. So this is the amount for the year ended 31st June 2023 for this financial period. Okay, so insurance, now we will write $7,320. Okay, so here on the question we have insurance $11,040. If you write this amount here, your answer will be incorrect. Okay, good. General expenses, it is $12,780. Okay, so let us write here, it is another expense. So we will write here general expenses. So on the adjustment we have accrued general expenses at 30 June 2023 were $186. Okay, $186 is outstanding. So now we need to add this amount to general expenses. Okay, on the question we have general expenses 12,780. With this amount now we will add 186. Okay, so here we will write 12,780 plus 186. Okay, now if we sum up these two amounts, we have here $12,986. Okay, so our next item on the question is here provision for depreciation of motor vehicle. Yes, we have depreciation. Then we have here provision for depreciation of equipment. We have two depreciations. Then ordinary share capital, this will be taken to the statement of changes in equity. General reserve, same. Retained earnings, same. Dividend paid, same. Okay, so now we will calculate depreciation for equipment and depreciation for motor vehicles. Okay, so let us write here depreciation. So here motor vehicle, and then equipment. So under adjustment we have number 4, depreciation is to be charged on motor vehicle at 25% per annum using the reducing balance method. You know, reducing balance method of depreciation, this is not complicated, but many of you make mistake. So reducing balance method, how does it work? First of all, you need to take the cost price, then from the cost price you have to subtract previous year depreciations to calculate net book value. And if you multiply the rate of depreciation by net book value, you will be able to calculate depreciation for the year. Okay, so here on the question we have a motor vehicle at cost. The cost price, it is $42,000, and we have next item, provision for depreciation of motor vehicle, it is $16,500. Okay, so now from the cost we will subtract the depreciation, then multiply the rate by 25%. So cost price was $42,000 and depreciation is $16,500. Okay, now we will multiply the answer by 25%. Okay, so what you get here? We get $6,375. Okay, depreciation for motor vehicle. So let us write here 6,375. Okay, now equipment. So here on the question we see equipment at cost, it is $5,000, and next item, provision for depreciation of equipment, it is $2,000. Okay, so the depreciation method for equipment is different here on this question. So what is the method here? Number 5, depreciation on equipment is to be charged at 20% per annum using the straight line method. Okay, so here it is a straight line method. We don't have to think about net book value or previous year depreciation. Directly we will multiply the rate by the cost price. Okay, so here cost price is $5,000 and the rate of depreciation is 20%. Okay, so if we multiply this, we get here $1,000. Okay, this is the depreciation for equipment. So what is the difference between reducing balance method and straight line method? So here we directly multiplied, but here for reducing balance method we have to subtract the previous year provision for depreciation, then we multiply by the rate. Okay, I have so many videos on depreciation topic on my channel. If you want, you can check out. This will help you to prepare for your exam. Okay, so here it is $1,000. Let us write $1,000 as an expense. Okay, so great, we finished writing all the items. Now we will calculate our profit, net profit or loss for the year. Okay, so here we have 6 expenses. If you add this all expenses, we get here 109,481. Okay, our total expense. Now if we subtract this total expense from this total revenue, then we will get profit. So let us subtract this amount. So what you get if we subtract, we get here $16,319. Okay, this is profit for the year. Why profit for the year? Because our expenses are less than the revenue. Yeah, so if we have our expenses more than the revenue, then it will be loss for the year. Okay, don't forget, because always you will not have question like this. So we will write here profit for the year. Okay, done. Next tutorial will be very important. Here I'll show you how to prepare statement of changes in equity.